Hey guys, Doug the Retirement Guy here. We're continuing on with our new series, the Monthly Paying Dividend Funds, 45 different funds being reviewed. And today we are reviewing Stage Industries STAG. Is it good for a retirement account or not? Stage pays a 4.03 dividend, and let's take a look at how well they do. First off, Stage, they are a REIT. Their focus is on acquisitions, ownership, and operations of industrial properties, and definitely staying all within the U.S. The platform is really designed that they identify properties for acquisition that attract returns across all of the tier one industrial real estate markets. So basically, what that's saying to you and us is, if you don't know what CBRE, they're looking for the big operations. They're looking for people that if uh, someone needs a warehousing space, they're going to be there for long periods of time. So they're not looking to get this in and out business that they're constantly re-signing contracts or ownership. They're constantly just renewing um, basically their lease agreements or have long-term lease agreements. So what is a REIT? Well, let's give you the advantages and explain it to you. First off, REIT stands for Real Estate Investment Trust. It is a simple way to put it. It's a way that anyone can become an investor in real estate. The REIT is the company that owns the properties across different real estate sectors. So basically, what it gives you, if you want to be buying railroads, you want to buy residential, you want to buy industrial warehouses, you want to be just in office buildings, you can make this virtually. There's REITs out there for every little segment of the markets. Now, a big thing that REITs gives you is that they are required to distribute 90% of its profits back to shareholders. And this is why we see fairly strong, fairly large dividends coming back from these guys, is that if they can give 90% of its profits to the shareholders, they have tax advantages down the road for them. The diversification, you don't have to put all your eggs in one big giant basket. You can pick out, if you want to be, like I said, in just the real estate, the warehousing business, that's out there available. If you want to be in just office buildings, that's available. You can find everything you want in a REIT in each individual package. Now, REIT performance realistically is generating future financial securities. In the last 25 years, most REITs have outperformed the S&P 500 and other corporate bonds. So these are one of the things that you're going to set and I call it forget, but you're going to set, and they're going to be long-term investments as you go. So let's take a look at what Stage actually offers. And they are in the commercial long-term lease properties. They are in over 41 different states. They have 117 million square feet. Their tenants they say, about 107 right now. But look at the tenants. The big three that I put out there immediately was Stage. They are the warehousing for Amazon. Okay, they will own the Amazon fulfillment centers, and they're constantly putting in new fulfillment centers to be able to cover America the way they want to do it. FedEx, the old-fashioned hub system, they now have warehouses in many, many different areas that they can get their products and the packages from people like Amazon to the residents across America. XPO Logistics. Now, you may not know these guys. These are the big trucking companies. These are the guys who get the semis on the road all the time. They have the large complexes that they need to do this with. So we're not dealing with little operations. We're dealing with some huge companies that these guys are doing the warehousing for. So we asked, why Stage? Well, first off, the dividend return of 4.03 may sound like it's a little bit low. In this operation. But here's the thing. They've been offering 0.68% growth over the past 10 years. That is not 0.68 in 10 years. That's every year for the past 10 years, their average is 0.68% growth in that dividend. So if you buy today, you can almost count on your dividend slowly going up each and every year. Now, again, as I said, the customer base, Amazon, FedEx, very, very solid players. These guys are not going anywhere. They are going to continue buying warehousing space and renting that warehousing space. They're not going to pick up and move on you. So you have solid customer base. Now, of course, because this is part of the monthly dividend paying out, they pay their dividends out monthly. So you can either reinvest and drip your monthly payments, or you can take the cash as a regular cash flow. And that's what we like to do here is we'll take the regular cash just like it's a paycheck every month. So when we take a look at Stage over the past year, and right off the bat, look at the numbers at the stock market return. The 1 month are up 8.74%, 6 months 0.52, year to date 11.58, 1 year 5.32, and over 5 years 33.07%. When we take a look at this, the 6 month is where we say what happened? It happened everywhere. It was the tariff attack on April 2nd that dropped the price of the stock dramatically down. I would tell you right now, this was a stock that was anyone knew that this was a buy opportunity. Market overreacted. The market did not listen, and it created a buying opportunity huge. Because you can see as this thing has come out of that basement, it's back up to where it was pre-April 2nd. So this thing still has some room to grow. But this is the other part of this piece is that Stage gives you a steady growth package. We look at the dividend charts, and over 10 years is how far back we can take this. You can see every year they have an increase the year before. Increase. That's why we have and call this the steps. This is a step program that every year they add something to the mix to increase their dividends and continue on. The dividend safety, A+. This is a $6.8 billion mid-cap corporation. Their yield effectiveness, the 4.05 forward dividend yield is in the top 30%. Okay, so what it's basically telling us is that you're expecting to see this chart 15 years, 20 years down the road. You will continue to see this chart of slowly adding to their dividends each and every year. And this chart shows it again, 10 years out, every year. They're giving a slight increase. Every one of those dots has been basically an increase in their year over year return. Now, granted, it's been flat, that's 0.68%, but that's a solid growth year after year. So we put this into our calculator. If we invested $10,000 into STAG a year ago, where would we be? Well, we bought it at $34.96. $10,000 invested gave us 286 shares. Well, at the end of 12 months, we were up 5.32%. Our dividend was 4.24%, or $424. So that gave us a total of 9.56% from growth and dividend payments. So as a whole, the package is very, very strong because the dividend, when you first look at dividend, you're like, oh, it's not very big, not very strong. When you add in the stock return over 12 months and your dividend payments, you come in with a very solid 9.56% return. We look at the chart over time, and you can see STAG is very smooth. Their average price is $36.29. Their current cost is $36.82. So actually, they're 1.4% above average, and that includes that drop that we had in April. So we believe the stock is going to continue still to steadily grow to that $40 price point. Nothing fast. Like I said, 5% over 12 months is about $1.50 across the board at this point in time. So is STAG good for a retirement account? And my answer is definitely yes. And I think you pretty much know that your NAV return, 5.2% gain in the value of your stock. You have a 4.24% dividend, which is very good. And you have a total return of 9.56 for a stock that gives you growth and dividend income. So we pretty much put this thing down to it's a moderate buy. I wouldn't, again, I always say you don't put anything more than 5% in any one particular fund. And this fund here, you're not going to sit down and say, oh, I'm getting 10, 12, 14%. You're getting a solid, regular 4%, 4.24% dividend and paying it each and every month. So it helps down the road to fill in blocks. But the other thing is you're gaining growth. You're going to have a positive in the growth stage. So as a whole, we believe that this is one of those that you put into it, you put a little money into it, and you let it grow and you let it do its thing. Guys, it's Doug the Retirement Guy. Again, I hope you like what you're getting. Give us a thumbs up if you like that. Don't be afraid to subscribe. We have tons of people subscribing. We're adding hundreds of people every single day. We really appreciate it. Help join the community. And if you have a comment, you like what we're doing or don't like what we're doing, put it down below. We're always looking for it. Everything helps our channel grow, and that's what we're looking to do is help grow your pocketbook. We'll check you next time.